In a world where market volatility can be unpredictable, one key concept that consistently attracts attention is the Fibonacci retracement strategy. Used by professional traders for decades, this technique has now been adopted by retail traders seeking to replicate the success of smart money traders. In this video, we'll delve into the world of Fibonacci retracement, exploring its parameters, entry/exit rules, and backtesting results. Fibonacci numbers, derived from the famous sequence of numbers attributed to Italian mathematician Leonardo Fibonacci, have long been recognized as a powerful tool for traders. The ratio of 61.8% and 38.2% has proven particularly useful in analyzing market movements. By applying Fibonacci retracement levels to a chart, traders can identify key support and resistance levels, allowing them to make more informed decisions. To implement the Fibonacci retracement strategy, traders typically